In the currency quadrant, there was a midday move in the price of the March euro currency futures, and the last 5-day price action may be forming a base in the euro currency. We'll see in the coming days. On December 27th, the euro closed at the highest level since July 21st of last year, and then proceeded to drop 1.7% in the next 4 sessions. Since then, we have not closed below the January 3rd closing price, which was the bottom of those 4 sessions that I just mentioned. Now today, we actually touched 110 again. We haven't done that in about 6 sessions, and we're going to end up closing, at least the New York close, up about 0.4%. On the high, we were up 0.41 tenths of 1%, so a little bit higher than the New York settlement price. On the low, 109.53, that was only down 2 basis points, so we'll call that unchanged. Recent data has showed employment in the euro area actually is coming in a little bit better. Yesterday, the euro area unemployment rate for November came in at 6.4%, which was down from the previous read and the expectation of 6.5%. So that's good data for sort of the direction of the currency as we look to see if the ECB is going to pivot similar to the way the Fed did. Tomorrow, we see the ECB's economic bulletin. So speaking of the ECB, we had a speech this morning by European Central Bank Vice President Luis de Guindos, and he sees economic weakness ahead. In a speech he gave in Madrid, he said, and I'm quoting, "Soft indicators point to an economic contraction in December too, confirming the possibility of a technical recession in the second half of 2023 and weak prospects for the near term." He added, incoming data indicates that the future remains uncertain and the prospects are tilted to the downside. So maybe the ECB hasn't quite pivoted fully, but the performance of the currency over the last 4 days shows indecision with a little bit of strength today.